Okay. Okay, that was my bad. That was all my bad. Um, so sorry about that. That was I gave Molly the high sign to take me put me in the studio. And and then I realized I didn't have any water. I didn't have any water with me. And I had to rush out to the get my water in this 89-degree temperature. But I'm in air conditioning, so I'm okay. Don't worry. Hey, Big Daddy, how are you? Okay, so I hope everybody had a great Fourth. I had a very nice time. It was a lot of fun, and I am back. Spent all last week putting stuff together for the hotel to apartment conversion summit. We're putting together the manual. It's going to be fantastic. 3 case studies, 3 contracts. We also engaged a software developer to build out the best analyzer software. This is something I've been putting together for a while. I've always wanted to do this way, and for those of you that work looking at deals, multifamily deals, and what have you, I've always used a couple of really good programs to analyze multifamily, but it didn't take you from soup to nuts. It didn't take you from the inputting of the deal for like a quick down and dirty analysis all the way to the generation of the purchase and sale contract by the push of a button. And that includes a letter of intent, that includes a pro forma, that includes the offering memorandum. And for the hotel to apartment conversion summit, we are putting together that software where we are going all out, and we're going to create the software so that you can get the information from the broker, put it into the quick analyzer. Yeah, we get a deal. Let's do a little bit more analysis. Let's make an offer. Okay, offer accepted. Let's get a contract. Okay, contract generated. A lawyer reviewed. We are under contract. We're buying that property, all within the same framework, and it's pretty cool. And it's something we've been working on, and we're going to have the prototype ready to show in Chicago. It'll show you how people can get access to it. It has so many different things to it. Yeah, well, John, listen, it's all based upon the truly ever, because business environments always change. You can get to the 90% solution. Yeah, that's true. It's kind of like what Leonardo da Vinci said about art. Art is never finished; it's abandoned. And that I totally understood what he meant by that, as I've been going through this software development stage with the multifamily investor software that we have with the MultifamilyOS program. But yeah, you're absolutely right. TWT. And yes, you can quote me on that Leonardo da Vinci quote. Nobody really knows if he said it. I'll just accept the MVP with software. I don't remember that, John. I don't remember that. It's kind of like, but you know who I interviewed on my podcast last week? One of the co-founders of MapQuest. I told my daughter. Do you know what my daughter said when I told her that? All proud, strutting like a peacock. What's MapQuest? Oh my gosh. Oh, what those kids didn't have to go through to get to their friend's house like we did growing up. Okay, let's talk about cap rate arbitrage. This minimum viable product. Minimum viable. Oh, yeah. Okay. I get it. And, that's kind of what I told my developer. He says, you want this by Chicago? And I want this part by Chicago. The rest we will build out over this coming months. So that's kind of where we are. It's going to be operational to determine the quick analysis and generate an offer by Chicago. The other issues, like it'll be able to do a purchase and sale contract, no problem. But the true pro forma and the offering memorandum, but with a push of a button, that's coming. But all right, anyway, let's talk about cap rate arbitrage. All it is, it's a fancy term. I love these. It's. I feel badly for people, and I don't, not because there's anything wrong with them, but just because they didn't learn. But when you hear people talk about the capital stack, well, tell me about the origins of your capital stack. And then the people sitting there listening, like, what the hell is a capital stack? And it's just a fancy term for getting from $0 in the deal to 100% of the deal being financed. What makes up that 100%? The capital stack. Well, when we talk about cap rate arbitrage, what we're really talking about is buying low and selling high. And we do that by manipulating the asset class of the property and then taking advantage of the buying low and selling high feature when you're looking at it, when you're selling it. When you look at cap rates, I once told the story of how a cap rate is a measure of effort. The lower the cap rate, the lower amount of effort is required to run that property. The higher the cap rate, the more effort it takes to run that property. I pulled that out of my hat when I was speaking one time to a group, and because I wanted people who were basically in the single family world to understand about cap rates and how we live and breathe cap rates and how you need to understand them in order to understand multifamily. Then I had Alexander Cartwright, Professor Emeritus. Okay, I just made this up. Alexander Cartwright is Professor of Economics at Ferris State University. He's also Professor Emeritus of the Multifamily Investing Academy. He may be listening to this right now. He's on his honeymoon on a cruise ship in the Mediterranean. So he may be hearing this, but and if he is, he should say hello. So he came out at our Fort Lauderdale event. He's speaking. He's going to be the kickoff speaker of the Chicago event coming up. He's going to be talking about the compelling reason for hotel to apartment conversions for multifamily investors. But he came up and he said the cap rate is a measure of the durability of the income an investment generates. And it was great. It was brilliant. It sounded fantastic. And then I thought, wow, that's a lot like my level of effort, but said in a different way. Just so you understand what he means by that, when you're comparing hotels to apartments, a hotel owner has to sell their unit every single night. A multifamily owner has sold that unit for an entire year. The customer of the hotel comes and goes every single night. The owner of the lease of the multifamily comes and stays for the entire year. The money for the hotel comes and goes, and if they don't come back the next night, it goes. The vacancies are much higher with a hotel than they are with a multifamily. The money for a multifamily owner comes every single month, and the person does not want to be evicted. So that shows you the difference of the durability of the income for the properties. The measure is the cap rate. A lower cap rate means a stronger, more durable level of income. A higher cap rate means a riskier level of income. So therefore, hotels trade at higher cap rates than multifamily properties. Now, when you talk about cap rates in hotels, for those of you that have ever done it or analyzed a deal, we don't necessarily use cap rates to determine the value. We use the average daily rate. We use the occupancy. We can calculate the RevPAR from that. It's a whole different formula. And then we use a multiple of the RevPAR. Okay, so once we figure out that multiple, or we start with a multiple, and based upon extenuating factors, we decide whether we go up on the multiple, we come down on the multiple, but we basically have a set multiple that we use to determine whether we can start negotiations or where to start negotiations with this person. Once you get that number, you're off to the races. On multifamily, we use the NOI and the cap rate to determine that number. Okay, but what we're talking about with hotel to apartment conversions is taking the property from a certain NOI and bringing it to a different NOI with a different cap rate. The hotel cap rate, we sometimes could be buying them at a 15 cap theoretically. And then when we go to sell the property as a multifamily, because we've now converted all of those units into annual leases and the income is more durable, we can sell it at a lower cap rate. We bought it at a higher cap rate. We're selling it at a lower cap rate because we converted the asset from one asset class to another. And boom, there you have it. We have cap rate arbitrage. And that's how millions get made in this business. So that is the real key. Think about what you've had to deal with over the last couple of years in the multifamily world. You've had to look at properties whose cap rates are continuing to go down every single year. You're wondering when they're going to hit bottom, because when they hit bottom, that's the top of the market. And you don't want to be buying at the top of the market. What we're doing with hotel to apartment conversions, we're buying at a higher cap rate. We are converting them to bring that durability of the income lower, to bring them to a lower cap rate, and then selling them. And that's we get to make up the difference. We get to put all that difference in our pocket. When you're learning multifamily, you're listening to all the gurus teach you that, hey, you want to buy low, you want to buy at a high cap rate and sell a low cap. You want to buy a C-class property in a B area, all that type of baloney. But the market has not allowed that to happen. And if you're staying within the same asset class, you're waiting for the market to change. You have no control over that. You just have to hope you caught that falling knife at the right time. Otherwise, you're going to get cut. What we're doing here is we're buying, we know, at a higher cap rate, and we're selling at a lower cap rate because we turned it from a hotel into a nice studio, one bedroom multifamily unit property. So that's the whole gist behind cap rate. Let me run through some of these things. That episode dropped. Oh, it did. It did. Thanks, John. That episode with Chris Hively, say that right? With Chris dropped today. That's so cool. I loved it. We had a good time. And I got him to make that statement. He said, yeah, geez, that's a really good question. Yeah, I got him. Got another one. Got another one for the blooper reel. Go Agile. Yeah. Good afternoon. Hello, I would say run and maintain. Yeah, let me see. I never heard it put that way, but it makes sense. Cap rate is a measure of the durability of your cash flow. Yeah, what do you think about that, TWT? I thought that was very, very well. I thought mine was pretty good too. The measure of effort. The way I told the story was two multifamily properties right next door to each other. One was built 50 years ago, and one was built yesterday. The one thing they have in common is they both generate $1 of NOI. They both generate the same amount of money. Which one is more valuable? And you think to yourself, well, geez, the same amount of money. But what I'm not telling you is how much effort it takes to generate that $1 for the 50-year-old property versus that $1 for the property built yesterday. And that measure, that criteria is the cap rate. That's how we do it. Let me see, Francis. Do the extra expenses and the conversion justify? Oh my gosh, extra expenses? Are you kidding me? Francis, let me give you some numbers. All right. No lie. These are real numbers. I invested in a multifamily deal, 72 units. We purchased them at $39,000 a door for renovated units. We didn't have any reno expense. All right. They're studios. I think a few of them are one bedrooms, mostly studios. Studios in that marketplace are trading for $85,000, $89,000 a door. That's 50 grand, 50 grand difference per unit. I'm not going to spend 50 grand on any renovation for a one bedroom unit. $50,000. That's the difference, because you're buying it as a hotel, which is a totally different beast than a multifamily. So I'm buying it. I think we bought it about 15 cap, and we're going to sell it at about a 7 to 8 cap. So that's, yeah. Believe me, Francis, the numbers are crazy. The numbers just make total sense. That's just one example. I'm in Overland Park, Kansas. I own a hotel at Overland Park, Kansas. We're doing the exact same thing. That one's going to be even nicer. That's a much better market, much better area. We're going to get higher rents. And a lot of times these numbers, even at the 8 cap, we're charging rents below Section 8. So essentially we're leaving meat on the bone for the next multifamily owner. So that they can capture some of the growth. We're just, we're not, pigs get fat and hogs get slaughtered. We want to get in there and make our money and get on to the next one. David Peters and I talk about doing over the next 10 years, 100,000 apartment conversions, hotel up to apartment conversions, because this country is not making, there is a whole class of people out there that need our product, and we've got to get them, we've got to make it happen for them. Let's see. I like both. Sean Griffith. Yeah. Thanks, Sean. I appreciate it. Sean is TWT, folks, if you didn't catch on. Now we're going to now we have to find out who Big Daddy is. When you sell it at a 7-8 cap, is the cap larger than the mark? Who cares? Who cares? This is a great, I love this question, Big Daddy. And Big Daddy, Sean, showed who he was, pulled the veil back. Who's Big Daddy? Is the cap larger than the market cap? Who cares? We don't care. We don't care what the market's doing. We're buying it at so low and selling it so high. We make our money and get out. We don't care what the interest rates are. We're buying it so low that we know that we're going to make money by converting it, that we're making so much more money that we just get out. We take our money off the table and we move on. It's like Paul Moore. I always use let me see. I always look at my buddy Paul. Paul wrote The Perfect Investment. There he is, Paul Moore. He also did a great blog post on Bigger Pockets. I highly recommend you all go read it. It had to do with trees growing to the sky, about what really Warren Buffett it really got me thinking about Warren Buffett. And he said that true investors don't care what the market's doing. If the market goes up, great. We're gonna make more money. If the market goes down, oh well, we won't make as much as we thought we would. But true investors know how to buy an asset and unleash its locked-in value, and that's where we make our money. Not on whether the market goes up or goes down. Those people who are out there buying these multifamily properties at the top of the market at the cap rates and thinking that I watched some guy on TikTok sitting back in a podcast room thinking that he's an expert, talking about how he's expecting, what was it, like a 10% annual growth rate for the rents. And then he was like, well, and then when the interest rates get back down to 4%, we're going to make a ton of money. Dude, where are you living? Obviously, this guy's new to real estate investing because he wasn't around last time. But that's just, you can't rely on that type of those types of events that you have no control over from happening in order to make money in this deal, in this real estate economy. So as that's why I look at this hotel to apartment conversion. I think about my buddy Paul Moore's comments in the Bigger Pockets blog post, and I think this is it. This is what I've been waiting for. This is life changing, and I got to show people how to do this, how to take advantage of it. And folks, we're putting together the agenda for the event, and we've actually reduced the amount of time that we're going to spend teaching you where to find these deals. Because right now, the deals are coming across our desk so fast and furiously. COVID is helping us. Interest rates are helping us. The PIP payments coming due are helping us. All of these things are helping us have these units move fast at lower prices than ever before, and we are in a position to take advantage of it. It's the coolest thing. Let's see. Let me see. Here we go. As long as the difference is big, you make money. Exactly. And you can't get too like, well, I'm going to hang on to this thing for a long time. I'll tell you, my partner owns a property that he's making bank on. He and his two partners, they've owned it for 3 years, and all three of them are making absolute bank on it. And he doesn't know what his exit strategy is going to be. He might just keep holding it because it really returns such a great return. So, man, it's you get to a certain point, you're like, wow, do I want to just sell this and go do it again, or do I want to start building up that portfolio like Warren Buffett does? And that's what we talk about in whenever you're working with me. We talk about the Warren Buffett method versus the passive investing method. And if anybody hasn't heard that one, go on my website. Oh, coming up, my new website. My new website's going to look hot. It's going to be awesome. Oh, and my adverbs and adjectives are tall, dark, and incredibly handsome. Okay. Can you provide a link? Oh, I can't. Quincy softball. I don't. Hey, Molly or Deb, can you guys see if you can find that article by Paul Moore on Bigger Pockets, or somebody else on here if you could do it? I don't remember the name of the title. If you can find it. Yeah, you see John Racine gets 2 to 4 a day. We get about 20. John, you slacker, get to work. Yeah, but they're coming fast and furious. John, if anything, go back into my my training on how to find deals where no one else is looking, and take the same advice that I give in that video and apply it to all these hotel brokers. Just for those of you that didn't see that, let me put John's comment up right there. I'm not in my office, I'm in my studio. Let's see. And this one from Iowan. Nothing better than a good arbitrage, right? What a fancy name for just buying low and selling high. Well, these guys, I think they have to come up with new terms. I'll check if I have that. Yeah, see if you have it, John. That's in the we're coming up with with the website. We're coming up with a whole new stable of training courses in different ways you can learn my courses, group coaching. We're the hotel to apartment conversions coming out. The way you did it, John. So there's a whole bunch of different ways you can get access to my teachings. So all right, but that's about it, guys. That's all I wanted to talk about today. If anybody has any particular topics they want me to cover, go ahead and post them here. We're gonna be jumping off pretty soon, but also go and I'm gonna just see if I can find that Bigger Pockets one right now while I have everybody here. Let me do a Bigger Pockets Paul Moore. Now see if I can tell you if I find it. Yeah, so there it is right there. I just typed in Google Bigger Pockets Paul Moore, and it pulls up his blog. Let me see if I can find which one I'm talking about. Wow, he's been writing a lot. I can't figure out which one it is. Yeah, it's let me see. Yeah, I can't figure out which one it is, but I'm looking at the page now, biggerpockets.com/blog/contributors /Paul Moore. Yeah. I'm sure that you put this somewhere, but what is your website? Where can we find your information and courses? Thanks, Doug. It is the best place to go right now is Multifamily Investing Academy.com. Multifamily investing. I spelled investing wrong. And then there's Deb. It looks like Deb put it on. Okay. And also do the MultifamilyOS.com. Those are, I don't know, Molly, when are we going to have the new site up and running? Do you have any idea? There you go. Resources, programs. Yeah, we just came out with a whole bunch of access to my free resources and some of my paid resources. So you can go in there and check it out. And it's pretty cool stuff. It's pretty good stuff, Mr. Homer. So yeah, but check out Paul. He's a good guy. He used to invest. Now he's out there, raising private money to invest in all different types of investments. Let me see. Okay, our new site will be moving live into August. In the meantime, check out the additional resources. Yeah, so maybe I'm jumping the gun. Maybe I thought it was going to be done like in the next week or so. Molly and Deb and Dan are dragging their feet getting that thing ready. Actually, I'm pushing people in so many different directions right now. It's getting challenging. So, all right, everybody, great call. I appreciate it. Anything else? Maybe what I can talk about is some of the things on the resources page, so you can get a look at it. One thing I recommend you all go check out on my resources page, you see there, is the calculator, the passive investor calculator, where I prove out using numbers that passive investing for these people who are looking to become GPs and multifamily millionaires is a multi-level marketing scam, and just work the numbers and you'll see that for a fact. So, all right, everybody, thank you so much for coming on board. Great to see you all, and I'll see you next week. If anybody has any topics you want me to cover, go ahead and send them in and track me down, and I'll see if I know what I'm talking about. All right, guys, good to see you all, and we'll chat later.